Good afternoon. This is the Elliott Wave daily update for the NASDAQ 100 and the S&P 500 for Monday, July the 22nd, 2024. I'm going to start on the NASDAQ, and I'm actually going to start on the daily chart. I'm sure that many who traded the NASDAQ were thinking that this has gone too far, it's up too high, et cetera, and the market did do well today in terms of I saw, particularly the trade that I saw getting put back on was when they're selling the VIX, and they take that cash and they put it into the volatility of the underlying within the NASDAQ and the S&P. And so being that you're seeing that, it does produce basically a self-fulfilling prophecy, and that the market will go up and just continually to go up strongly. And because what they're doing, if you think about just the trade, and that's kind of where I'm coming from. A lot of people, they're looking for, well, it's the Democratic situation changing, so it's that bump from that. It's like, no, and maybe some of that was, but when I really break it down and I look at it, it was coming back into anything AI all over again. And it was selling the VIX and taking the cash and putting it into, like I just said, the underlying, such as Apple, AMD, Amazon, Broadcom, all of them. And what did they really kick to the curb? CrowdStrike. There had to be a whipping boy, so to speak, for what took place last week and continues to hamper airlines around the world. So there is fallout coming from that, but these reestablishment of a lot of positions that likely came off or went dead in the water, so to speak, for last Friday's expiration. Now, what it has done on an Elliott Wave basis, not much. I think I may have discussed over the weekend on the podcast that the move down needed an additional 5. So I'm going to start here on the daily, just kind of go like, I feel like I've gotten 1, 2, 3, 4, 5 inside this, and to finish the minuet third wave. So that's what I think we've got done now. And then the NASDAQ, the minuet third. And we had 2 great subdivides in between. So that third was a classic. In that classic Elliott, where that it subdivided and then we had an extension within it. So the third of the third subdivided, right? So the third of the third subdivided. And that gave us that little extra boost. It gave us additional downside. It gave us acceleration, all the things we look for. So I have no reason to go outside of what I'm seeing right now. Characteristically, personality-wise, everything seems to be falling into place. So this jump, on a pure technical basis, there's no problem with it. In fact, it has additional space where it could run up. The bar itself was pretty strong, not necessarily a total bullish engulfing, but pretty much. We kind of got above it and we tipped above it, came back down, but it looks like there should be follow through. Now it might be follow through and end up pulling in a tail. So in other words, we open or it goes up higher, maybe to next resistance, and then fails and starts to come down. And on a daily, that's going to leave a tail and a smaller body as it starts to come down. Now, there's still no problem with that, but what I wanted to kind of show here was, again, clean 3. So 1, 2, 3 on a minuet level. We're in minuet 4. We just kind of went above the fourth wave of 1 lesser degree, and that all fits. The other reason I want to start on the daily is because, again, here's the box. Here's the window, whatever we want to call it, the fourth wave of 1 lesser degree off of what we're doing, being that this is a minor third that finished. This is the area I'm looking for this market to come back to. And I wanted to show on the daily, we've gotten down to 19,600. If we were to drop down to 19,000, then that would put us pretty much maybe a little bit more than 50% into this area. So, 62% start to put us into it. 100% takes us to the bottom, which is what the target is actually. So, or anywhere down in here, but I just wanted to show the progress of the decline off of the highs, which were on the 11th of July, to the lows, which was on the 19th of July. So basically, we have 8 trading days there, and we made quite a little dent in the decline, or the minor 4, getting us down into here. Now I'm going to bring this back down. In fact, let's just take it to the hourly chart, because I want to again look at the inside, and then I want to look at this. Where are we inside of this 4th wave? So once again, so you can see there's the 3rd, then the minute 5th, the minuet 5th, the sub-minuet 5th. And so coming off, we've done minuet 1, minuet 2, minuet 3. That's what finished. I had left that open, feeling that I was not able to cleanly count, but I suppose I could break it down and do it. Some people over in the S&P are talking that this is really a 3-wave instead of a 5-wave, and I will address that in just a moment. Now here, I do think it's a clean decline, and the rally, although started right, but now really is a 1-2, 1-2. If not, then it's an A, B, C, B, but it doesn't fit there either. So it's a 1-2, 1-2, 3, 4, 5. 4, 5 would be wave A, but I do think there is another possibility of what this all is coming off, and that there's a possibility of getting an ABC and then getting the 1, 2, 3, the C wave in. So again, we've got a lot going on down here, and even if I drop down to the 15-minute and I open that up, this is what we're looking at, and then this is what we're looking at. So again, ABC. There's the A, there's the B. 1, 2, 3, 4 overlap. So no matter how we look at it, we're going to run into some overlap, some different things that are kind of happening here. Is it going to be allowable as that goes up? Does that form wave A, or does this form 5? And then this is the ABC, because there's our resistance. 382, the most common. So to try to count this out, I do believe the rally is associated with what's going on. We had that big interruption there early, and then just took it all, And this is where the trade where they were selling the VIX and buying the underlying kicked in big time. And so the money made is here. This is where it was like, just jump in. And because the moves were big, volumes were light, and the moves were big. And we're talking about going from 1837 with a low of 840 up to 874, that with that one. But get into some of these bigger ones, and it's a 50-point move, and depending where you got in. And $50 is $50 times, right, $20 a point. So it's a big trade. So it works. Now that's kind of what I'm talking about in terms of, like, I put out that thought, that survey on what people thought. The type of information that I intend, along with my colleague, intend to really start putting together, which we already do in the trade room, is this type. Well, yes, get long, just hold the trade, because of what we see happening internally, what we see technically, what we see in terms of the options flow or the money flow, whatever you want to look at it. We're looking at things outside of, oh, well, it's this place's earnings, or that's happening, or it's the Democrat bump, or it's the Republican bump, or whatever the situation might be that's being fed into the market. it's really gotten to a point, it's like if you're day trading and you're just moving in and out, what would you have called that? Oh, they're dissatisfied with it? It was just a move, and it was called money flow. It was called gamma flow. However you want to put it, that's what creates the moves. It was when CrowdStrike decided to puke. Okay, that produced a lot of options trades, et cetera, et cetera. And as other stocks started to give up, things changed in their makeup as well and produced the move. I don't really care. I just care to catch the move. So having said that, I think that we will continue to have some decent trading. This was a little bit not as quick as we've seen. It was a little bit to the downside, but it's consistent. We had more serious down, and then we had a serious up, and then we had a serious down. So with a couple of good little spots in between. That's the part. That's what I'm talking about, and getting front and center first thing in the morning, where we get some good moves, and then setups for people as we get through the day, and we can leave things where breakpoints become. So we're getting information on where we might have block trades, where we have large orders sitting and resting, and what does that mean, and how does it affect the trade, and et cetera, onto the downside. What's really happening? What are they monetizing, if they're monetizing? So again, a lot of stuff. I apologize because I'm just trying to go through, because again, the decision that I'm trying to put out there to make is changing the intensity of the information that I'm presenting for the NASDAQ and the S&P on a daily basis, and putting it over and making it a part of the trade room. So the draw is that I'm looking for people that actually already are day trading, or they have an interest in picking up the NASDAQ or the S&P or the Russell, because these are all things that we can provide the analysis and people can be able to trade. So again, that's the concept. That's what I'm looking to do. I already have the trade room, already have two of us do the trade room, and we're providing, let me just use the English word, a plethora of information, of solid information, of tradable information. All right, so here in the NASDAQ, let me just finish. Going back out to that hourly chart, 15-minute chart's kind of like showing a little bit of a pullback, but it does not appear that this is finished. I think we still have more to go. Our next resistance, just, well, I don't need to do that. I can go this way as well. Oops. Nope. Make me go that way. Is that I think we still have our next resistance at 20,090. And then we also have additional resistance at 20,162. So up in that area, 160, 150, 160. And it could get there and not be problematic. In fact, it could get to the 50%, and in this case, still be considered a 4. What it can't do is it can't go above here. 20,335 starts to break it and leaves us, unfortunately, with 3 down. Now, I know I keep talking about this because that's the other side of the coin, guys. And if you didn't know it, it's like, if you don't know a break point, maybe you'll get stuck. But that's going to be a break point where you're going to want to change your mind and start going with. And they can do it, and the markets can do it. We've witnessed it. We've watched it. That doesn't mean somebody's right or wrong. It doesn't mean that, oh, you called for the correction and we only got a little bit of it. It's like, it's not me, it's the market. I'm reading the market as best that I can. And so right now, yes, I feel that we can get here. We can get as high as there if they keep going and they start breaking above 20,335. That's going to invalidate this particular view, not the decline. But what it would suggest is that the decline is going to, the rally will continue and likely push to another new high. If it does, our resistance is going to be found up closer to 21,100 or above. Not just a little peak above this, but a move above it and then up into here. And they do it now versus later. Could this be then a minor fourth wave? Yet to be determined. I would not think so because I have to call this minute A, minute B, minute C to put a minor 4 under there. And it didn't come down. That's not 0.382 of the entire third wave. It's 0.382 of the market. Just it's this minute 5. That's that 382. So it would be very, very shallow and likely not a minor degree. So I would work it out because right now I'm okay with my count coming up to this point. So whether this is just, yeah, I mean, it's already pretty stretched. So in any case, my thoughts are that we come up to 20,090. We possibly can come up there. I don't want to see it to break above there. And I don't have that control, so I can only hope. But I know what I will do if it should. Now, RSI wise, yeah, it's kind of getting on the hourly, getting a little toppy. Moving averages on the hourly, you can see that we have kind of come back above the 50, above, and now we've got the 20 and the 13 pushing higher, heading that way. So that, and then out on the daily, the moving averages, again, the 50 is now kind of going flat, rising, but going flat. And the 20 is now going to sit up here and go flat. And that actually is also resistance. 20,139, I gave it to this point, and it's really about 140. So the 20 right now on the daily. So there's kind of our resistance points, and I'm hoping that's going to be strong enough and it will turn the market lower. I can put a 4 up there. We'd be looking for a 5. And then again, that's going to be wave A. And then we're looking for another B wave rally. All right, over in the S&P. And thank you for indulging me on let me tell you about what I'm thinking of doing. Same thing, I'm going to start here on the daily. I am going to open this up just a little bit like that. There is that window, that section of the market that I'm looking for this minor fourth wave to come down to. Interestingly enough, though, it's a little bit different here in the S&P. Again, just to kind of show we've gotten our low thus far of all these sequences is 55.42. And so this is the top end of it, 53.98. So, okay, we're getting closer to that, but ultimately I'm looking for it to get inside this and towards the low versus the upper side of it. But you take what you can get. Now, counting this down, I did, let me just go right down to this hourly. I did finish by going 1, 2, 3, 4, 5 instead of 1, 2, 3, 4, 5 there. That was the 3 because it was pretty clean. A 4, which was strange, but it's a flat with a little bit of a failure and a little tiny bit of an overthrow. And to put the 4 there. And then again, that became slightly problematic. And in essence, I suppose I could go 1, 2, 3, 4, 5. If you had to. If you had to. And then off we go up in an ABC, which also, on the daily, it's more of a bullish bar. We have kind of come in, and I'm putting this down as wave A, minute wave A. The other side of that coin would mean that this is still 5 waves, or yeah, I kind of have to do this as a 5. And this pretty much is a 5. Yeah. It's kind of a little bit more difficult. I'm going to have to let it play out before I can change it. But right now, I'm going to leave it as a 1, 2, 3, 4, 5. I'm going to put the wave A there. That's A of minor 4, by the way. So we're in a B wave. That's a little bit different on the fib levels because now we're kind of looking for at least 50 to 62% in the retracement back up. And then for the S&P, that is suggesting we've already gotten above 56.10, and everybody was really holding their breath for 56.07. So it kind of came back, and now it's sitting right kind of at, right? 56.09, but if it's 6.10, we can come down. We're back at 56.07. But we're looking for a B wave. So we have that 50% along with the hourly 200 sits at 56.25, and then we have the 50% retracement at 56.31. That's pretty popular when we get at least an additional pullback. It's 50% and it pulls back. So whether this is in itself going to be on a minuet degree, and minuet A, minuet B, minuet C, and to finish the larger B. So we've got that going on. Or maybe that was here. I don't think so, but we have to let this play out. So what I'm giving you are the options of now, what the market can do now. And so if it turns out that that's done, then it's going to start to drop, but it's going to find the support. We got moving averages kind of touching right there at 55.98, so almost 5,600 we can call it in the futures market. Remember back when I talked about over the weekend, I gave you that in the SPX there was a put wall at 5,500. That was and ended up being pretty strong support, because as the market opened up today, you saw how quickly they moved that threat away from breaking that put wall. And suddenly, you know, the SPX is trading above, well above 5,500, and the ES is trading above 5,600. So I think eventually, yes, 5,500 will be broken, but it was going to be in the C wave. So minor force should be able to get below 5540 and below 5,500, obviously, since we're looking for the move to get us as low as 5,000 something, 5,020, somewhere in there, basis the September contract. So again, the hourly chart doesn't look so bad. We've marked the 5. I have people that they have a little bit of problem, but I am marking this as a 5, and I'm putting the A underneath it until the market tells me differently. So I'm not fudging anything there. I'm not fudging anything there or there. Wave 3 is not the shortest. So all rules are in place, and we're moving on. So I suppose it's again, if I break this down to the 15-minute, the 15-minute chart, you've got the choices here. There's an ABC. It's a 1, 2, 3, or is it 1, 2, 1, 2? And then what's that? 3, 4, okay, 5, A, B, and then a 1, 2, 3, 4. And we get a 5, and then that's it? Possibly. For wave A, possibly. Wave A of B. Or is it all of A, B, C, and we're going to put a B up here? Possibly. I don't know yet, because we have to see what the circumstances are, what the infrastructure of the market is, what things look like, where the flows are. That's going to help us. Everything put together to form the technical picture. So back out to that hourly. Right now, if we're going to pull back, you can run fibs. Sorry about that. I want to open this up a little bit. You can run fibs the whole length, because we'd be looking at a B wave, possibly, unless if we get up here and that's it, and they start to just bring it down. A C wave will look very similar to all of this. It's just going to go ding, 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 or even that, but it stopped and they took it all back. Right, that won't happen in a C wave. We'll have smaller, but once they do that, nah, all bets are off. Then you see the direction. So in this case, if wave B finishes and we're looking for a C wave, the C wave is going to resemble a third wave, where it just starts to go. Now, even this fifth, it just starts to go. And that's what would happen here. And we would start to break through all of this, and that would give us even stronger hints. Upside must be over. And then we have levels. We will have additional levels coming off to give us an idea. For example, we'd be coming down to A, B, and we'd get all the levels for the C wave. So depending on how high this B wave gets, we'll have our C wave levels already put in. And then the most common would be 0.618, 100%, and 1.618, and then 2.618. And I imagine from these levels, if we get it in there and we start to move back down, that we're going to kind of come in down inside the box. You can get it was a pretty strong A wave, but tame in terms of the distance. And then we get a stronger B wave to come up here. It'll be the C wave that will be the most destructive and just really bring it down quickly. So unless it's A, B, and yeah, I still would look for the C wave to do the damage. And otherwise I have to drop this and make this minuet wave 1 a 5 to form wave A. And that would really put this thing down here. So those are my choices that I'm working with. I'm giving what I find to be the most logical ones, and that is the fact that it's a B wave coming up, and we still have a C wave, and it'll be the C wave that should be the more destructive one. All right, I'm just going to leave it kind of right there. Now, tomorrow, again, what we got coming in this week in terms of economic numbers. Tomorrow we have existing home sales, and this is the PMI week. So we have the S&P Flash U.S. Services PMI and the S&P Flash U.S. Manufacturing PMI, both tomorrow 9:45 a.m., existing home sales at 10 a.m. And that's it for Tuesday. And that's going to be it for today. And our next update will be on Tuesday, July the 23rd. Also for tomorrow, folks, least I forget, I believe it's Google. Yes, Google and Tesla report after the close.